here as well. So just check those out. We won a lot of sort of big news this week as well with the energy companies and what that might mean for things like inflation down the line. Boris Johnson's been over in the US talking trade. So the great news, I have to say, in the last couple of weeks about some significant investment into True Potential. I mean, it's something which you can talk about this day. Hello everyone and welcome to another True Potential Do More With Your Money podcast. It's Friday the 24th of September. Today it's episode 87 and that can mean only one thing, that it's going to be episode 88 next week. But it also means that it is time again for another round of your questions. We've got them all here. Thank you very much for sending them in and we've got an expert panel to help answer them. So let's meet them. Joining us again this week on the podcast, Chris Leyland is back. Hi Chris.
Morning Peter, how are you?
All good. Chris, what is jungle juice?
So we went out for an investment team dinner last night.
Yeah.
But obviously with the podcast today, I thought it was better not to drink any alcohol.
Yeah.
So I was given a non-alcoholic cocktail called a jungle juice.
Were you given it by a 5-year-old?
It literally came with like various different things inside it. Yeah. And I think it was designed for young children.
Was it tasty?
It was quite sweet.
Yeah.
But,
I feel like, was it pink or green or something? Was it that kind
I
of
think
colour?
you know what kind of colour it was. It's pink.
Right. Oh, it is
so
pink.
again,
right,
yeah.
okay.
I thought it'd be green if it was a jungle juice.
You'd think so, wouldn't you? But then children's drinks tend to be pink, so...
And I'll also give the waitress credit because she kind of walked right the way up to the table and announced to everyone who ordered the jungle juice.
Yeah.
And then it was brought to me. But yeah, I think the lesson there is probably not to go out and drink jungle juice and just be a man and drink
some
normal drinks.
Yeah. Okay.
I have a follow-up question for Chris. Is
Go
that
for
okay?
It. Of course it is.
Did you remember all of your clothes last night, Chris?
Oh, this is a good podcast, isn't it? So yesterday I cycle into work quite a lot. I quite enjoy it, but obviously that means that you have to bring things with you to wear.
Yeah.
So it's quite an important thing for work clothes.
For all of us.
For all of us. Literally, it's not that kind of office, yeah. But I forgot my socks. So I had to walk around sockless and there were various people taking pictures of me and things like that. And I was reminded of it every time that I literally walked past anyone. So it was a great day yesterday. No socks.
Fun day out.
No alcohol, but a lovely jungle juice.
Well, it's good to see you in good shape today, so welcome back. Good to see you, Anna, on the podcast as well.
Yes, good morning.
Have you remembered your socks?
I have. Well, actually, I don't need socks with these shoes.
Oh,
but
well.
At least they're not in the shot.
And
so
have you ever
it's fine.
tried jungle juice before?
I haven't. No, but I don't think I will after.
No, I think
the way you've described it.
Definitely worth giving that a miss. But Anna's going to help us answer some of your questions today. And we've already heard from him, but he's here. The Chief's in. Lord Daniel Harrison of Newburn is here as well. So welcome back to the podcast, Dan.
Thank you, Peter.
Have you had a good week?
Lovely week.
What have you been doing like?
Don't know.
Well, we're saving all our crap for later in the podcast, so don't worry about that. Chris will give us the news of the markets in a moment, but first of all, a bit of True Potential news. This week was the UK Platform Awards. Some people call them the Oscars of the financial services industry, and we had a great night down at the Park Lane Hotel, at the Hilton Hotel there on Park Lane this week in London for the Platform Awards. I'm delighted to say that if you've ever been to True Potential before, you'll know from the size of our trophy cabinet that we do tend to pick up a gong or two at these awards over the years, and this year was no different. We had a fantastic night. I've got the awards right here actually in my bag. We had a great night and we had an even better, well, not an even better, but an equally good time on the train journey on the way home celebrating. So I haven't actually been into this bag since we got off the train at the station, but I know the awards are right in here. There's the first one. Oh, sorry, that's Katie. She was with us. I know you've been looking for that, Katie, so there you go. Sorry about that. The first award was this beautiful piece of heavy...
Oh, wow.
Yes, well, absolutely wonderful award, and we made it not one, but we got a brace, and the other one is right here as well. So just check those out. We won. Well, Daniel, you can tell our wonderful audience first of all a bit about the Platform Awards and a bit about Platform, and then you can tell us what we actually won.
I'm not sure what we won because you've
right.
turned the awards the wrong way around. No,
best platform service and best platform provider.
Best platform provider under £40 billion and best platform service provider as well. So,
having done that bit, I'll just turn them back around now.
Turn them back round for that.
People can see
yeah.
the
Unless you listen to the podcast and then you haven't got a clue.
Well, you'll have to go to the YouTube channel to see what we're talking about.
But no, I think they are, Peter. These we have two great awards events. We have the UK Shoulders Awards, and then
Yeah.
we have the Money Marketing Awards, which I think we're at next week.
That's right, yeah.
As well. So Oscar season is firmly upon us. These awards are fantastic because they celebrate the investment piece, they celebrate what we do with the platform as well. And particularly proud, I think, to win these because they were both based upon advisor awards as well. So 25,000 advisors in the industry, nearly 40 different platforms to pick from. So to win out of that and come up with not just the service but also the best platform provider, I think validates what we've tried to do since inception, which is really look after our clients, really look after our advisors. And we don't need to charm anybody in interviews and things like that. We just have to hope that our advisors love what we do and vote for us. So
absolutely.
Thrilled to win them.
And as you say, you know, being voted for, if you like, by advisors as well. You know, we talked on the last time I was on the podcast, we did a Q&A, and I think one of the questions was just around, tell me a bit about True Potential and all the rest of it, you know, people who are perhaps new to the company. And I think it just goes to show that strength in depth, the fact that we, as you've always said, we work with 20% plus of the advisor market. And it's those people who are recognising that in the industry, our platform, our service, the service that we provide to the advisors and therefore to the clients is well, second to none, clearly.
Yeah, no, and look, we've talked about this in podcasts, we've wrote about it, we've shared videos. We rewind back 19 months ago now to the first lockdown occurring. We deliberately overcooked what we do in terms of service. We pushed out more media than ever before. We pushed out more communication, more phone calls, more emails to clients and advisors. And that's what I was saying about it almost validates that approach when you win this. We don't enter many awards deliberately because I think some awards out there in our industry, you basically almost pay for a bit of advertising. You pick up a gong. That's not the case with awards like this. You know, you have to work hard for them even to get shortlisted in the first place and then get the votes. Anna, I know that you work on the platform operations team, so you're speaking to advisors every day, so you're kind of on the front line. So congratulations to you and the team for winning it.
Thanks very much.
But maybe just, if you wouldn't mind, just explain to some of our clients who are probably listening and watching, who might not understand, you know, you hear about a platform and it's obviously quite an abstract thing. It's very specific here, but to the outside world, it's a little bit abstract. What do we mean by a platform? What does that mean to somebody watching who's maybe got their pension or their ISA with us?
Yeah, it's basically, maybe I'll talk about the overlay, Chris, and you can talk about the mechanics. But
absolutely.
So the overlay, it's basically a piece of technology, and what the technology does is it recognises what type of tax wrapper a client's in, be it an ISA, a pension, GIA, bond. It also looks at the allocation of where the funds should be applied. It looks at the different comings and goings, incomings, outgoings. That would be fees, for instance, in terms of outgoings, or it could be direct debits coming in terms of incoming. It also looks at new money coming on and off the platform as well. So say something Anna does, works in the transfer team. We get transfer requests from new clients coming on saying my money is currently with Standard Life or Quilter, for instance, and I want to move it to True Potential. We have to set that about as well to take the legacy platform money onto our platform. But then underneath it does a lot of mechanics as well. So Chris, when you're dealing, say, with the True Potential portfolios, you're having to look how that money's allocated to clients.
Yeah, absolutely. So the platform for us, from an investment perspective and from a client's perspective as well, one of the key things that it does is it holds the client's investments, but then it allows us to adjust the allocations to the individual fund managers that we have within the client's investments. So what we would do as an investment team is we would input model allocations, so input trades, and then what the platform does is it basically facilitates that trading across all the client base that we have overall. So a huge amount of underlying parts that go into that, as you can imagine, with all the clients that we have, but basically it synchronizes all that trading across the whole of the client base.
So a bit like the engine works of your car, you don't need to know how it works, but it's a pretty important piece of getting you where you want to be.
Very important.
And
exactly.
You've just won Best Engine twice at the awards this year, so great news for True Potential. Speaking of news, Chris, busy week on the markets, a lot of sort of big news this week as well with the energy companies and what that might mean for things like inflation down the line. Boris Johnson's been over in the US talking trade, so tell us about the week it's been on the markets.
Yeah, it's been a bit of a roller coaster ride in equity markets, and in some ways it's quite nice that we're filming this today. If we would have filmed this earlier in the week, it's quite a tough start to the week. But actually, when you look at the overall week, You've got the FTSE up 1.6%. You've got Europe finishing up around about 1%. US finished up around about 0.3% up. I'm very surprised to say that actually China was flat over the week. Why am I surprised to say that China was flat over the week? It's because earlier in the week, all the big news that was driving equity prices was around China, and it was around a property company called Evergrande. So Evergrande is the second largest property company in China. It's very indebted, so it's very highly leveraged. And what you're seeing is the Chinese government really trying to reduce leverage in the financial system overall. So what you saw is the investors take the view that Evergrande was going to default on its bond coupon payments. Now, luckily, what happened was that China injected some liquidity into the system. So I think they injected, it was around about $17 billion worth of liquidity into the system, which helped prop that up. Evergrande came out with a statement saying that they'd agreed terms with bondholders. So actually what you saw is a bit of a dip at the start of the week, but then you've seen a strong rally as you move through the rest of the week overall. I think for us, when we look at the True Potential portfolio proposition, we have very, very minimal exposure to Evergrande overall. And actually, Evergrande's been very, very strong this week if you look at the whole week. Yeah. So that's the sort of start of the week, I guess. Probably the second part is just really around the Bank of England. Just yesterday, they came out with their growth and inflation forecasts. So what you've seen is the growth forecasts come off a little bit. So they've dropped the growth forecast by 1%, but it's still a really strong growth forecast if you compare it to kind of trend pre-pandemic. Inflation is forecast to be 4% at the end of the year. It's obviously 3.2% right now. A lot of that's kind of base effects from eat out to help out. I think that's what it was called. But what you're seeing is obviously exactly what you're saying around factors such as energy prices coming in there. Obviously, I'm sure we'll talk about this a little bit later, but a lot of stories around wholesale gas prices. I think they're up 11 times since the start of the year, which is pretty incredible. But how's that affecting energy companies overall? And I think, for us, inflation is arguably the key topic that we're discussing right now. Yeah. It's certainly the key topic that we've been discussing over the year.
For a while, we've been talking about inflation. We've been talking about the fact that it's going to be heading in one direction, really.
Absolutely. And the thing with inflation is, it's normal to have inflation, but we've actually been through such a long period of time where inflation is incredibly low. Yeah. Now, what you're seeing now is inflation at higher than normal levels, but the rationale for that is, we've been through a pandemic. So you're going to see abnormal numbers coming through because you've been through a COVID pandemic. I think, when we think about inflation, what will happen with that, we do see inflation being high over the short term. There's a lot of factors that are feeding into that. But actually, over the longer term, we see inflation coming back down. So for us, it's something that we're monitoring. It's something that we do believe is transitory, though, overall.
Well, let's give the media something new to talk about.
Yeah, absolutely.
Talk about, clapping their hands with delight that here's another disaster which we could potentially spin out, energy prices, inflation, empty supermarket shelves coming up, etc. You feel like saying, shut up.
I know. No sparkling water.
No, well,
because there's no gas, but we've got sparkling water.
We've got sparkling water.
We've got special delivery.
Very, very. It's big gold dust.
It's more expensive than jungle juice, I've heard now as well. That's because of that.
No, jungle juice is expensive.
These are. But what happens is the more it's talked about, then you whip people into a frenzy. So what do you think's going to happen when you're talking about empty supermarket shelves?
Well, I'm just waiting for the forecourt at the petrol station to be queuing out the door now because people have been talking about shortages at the petrol pump. So I'm just waiting for the next.
Absolutely, and Chris will not be able to get his slab of Coca-Cola this weekend because there's no CO2.
Well, I hope there's no run on socks before he's had a chance to stock up or sock up.
Sock up to help out.
Put a sock in.
New government scheme. So I think we've got that, and then, as you say, with the energy prices as well, and you almost feel sorry for some of these smaller energy firms because I kind of get the impression they've been hung out to dry a little bit.
After having years of being told to switch provider to some of the new entrants in the market, and now of course they're as you say, they're being hung out to dry.
Yeah.
But it does go to this point though about making sure that from an investment point of view, you're factoring in inflation and looking at where your money is, what return you're getting on it, and beating inflation. And if inflation is going to tick up in the short to medium term, it's a moment to have a fresh look perhaps at where your money is sitting. If you're stuck in cash, it's time to maybe have a rethink about that, isn't it?
No, absolutely. I mean, I think I might be jumping ahead a little bit, but we've got a question around the FCA are actually guiding people with more than £10,000 in cash to actually look to invest that into investment products. And the reason for that is inflation. The reality is if you've got UK inflation at 3.2%, so basically prices of goods and services are going up 3.2% year on year, then I don't know, what's the best cash account? Let's say 1%, something like that. That might be me be even a bit overly generous there. Well, what does that mean in real terms? It means that you're losing 2.2% per year of purchasing power. And that's a huge thing. Now, if I think about, say, our balanced portfolio, I was just looking at the figures this morning, we look back over our just under 6-year track record, we've done 7.5% after fund charges. Look at our aggressive portfolio, we've done over 10% after fund charges. So what that shows you is basically cash is not a low risk investment in a high inflation environment. In fact, it's almost a super high risk investment because all it does is guarantee that you lose money.
You're going to lose value.
Yeah, so if you're going to say to someone, invest your money and you're going to lose 2% a year or 2.2% a year, people say, "Are you mad?"
Exactly. So, and I think a lot of people, everyone likes cash. Do you know what I mean? It's a lovely feeling looking at your bank account and it's full of cash, but cash isn't going to help you in the future. Now, the reality is that you have to be invested to grow your money, and that's in any environment. But it's particularly important when we're in a higher inflation environment, which we are. And the other thing as well is, the reality is that, we talk about inflation coming down potentially next year from the levels that it is right now. It's not going to go to zero. The Bank of England have a 2% target. It's going to go closer to that 2% target. And still, if you're only getting 1% on cash, you're still going to be losing 1% if inflation's at 2%. So for me, I think it's so important that if anyone is listening to this, if you do have a lot of money there sitting in cash, think about it. Think about that purchasing power. Think about what you want to do with it, and most importantly, think about investing it.
And maybe speak to an advisor and get some.
Absolutely,
advice,
if you can, definitely.
Okay, let's get into questions. As I said at the start, we've got lots of questions being sent in, so thank you very much for sending them in to us. We'll go to Scott for the first question, and Anna, I think it's probably one for you to pick up if you wouldn't mind. Scott says, my employment is coming to an end. When I start my new employment, what will happen to my pension pot that I have with you?
With True Potential?
Yeah.
So the pension pot would still stay invested, and it basically would until it came to a time where you were going to take funds out of it. But I think the main point is just because you're moving employer doesn't mean that you can't still pay into the pension that you have with True Potential. So you can still continue to contribute with True Potential even though you may have a new pension starting up elsewhere with that employer.
And that must be quite a common thing. People do move between jobs. It's just a fact of life. So that must be a fairly Scott's issue there. Probably is one that's pretty common as well.
Yeah, definitely. People move jobs all of the time, but I think maybe sometimes it's thought that if you do move and you have to move to a different provider that company's set up with, you're not able to go and contribute to the other pensions that you have, but you are still able to do that.
Yeah. I think I was reading that people have nowadays with different careers moving on and all the rest of it, you end up with something like 12 different pension pots scattered around by the end of your...
We find this particularly in the workplace pension side of things, Peter, where obviously which I assume is what Scott's maybe talking about there. He's been paying into his True Potential workplace scheme. We pick up a lot of clients when they come in, and we actually speak to clients when they onboard, and we say, have you got these other pension pots lying around? Because you could, maybe if you work somewhere for 3 years, I don't know what the average tenure is now for jobs, I think it's 2 to 3 years before people tend to move around. You've accumulated £2,000-4,000 typically into a workplace scheme. Now, don't just leave it sat there, because when it comes to retire, you're going to have a nightmare trying to find 10, 12 different pots and write to them all. But B, you're also missing out on that kind of firepower which one larger pot gives you. So what I'd almost recommend, not to Scott because he's moving off, so Scott, you leave your pension where you are, Scott. But for anybody else who's coming into True Potential Scheme, speak to Anna, speak to the rest of the team, and look about how we can consolidate all of your legacy workplace pots into one.
Yeah.
Chris could tell you all day, he could show you pictures, show you illustrations about how £100,000 will grow more than just like 10 pots of £10,000, for instance. From there, plus from an organisation point of view, you get the TP tech, so you can look at your pension in one place and track it, which not everybody else has.
You kind of it's neat actually because you're kind of answering Leslie's question there. But so I'll jump to Leslie's, which is why should I invest in True Potential? Why should I switch my main pension to True Potential? And I've done this. I've through the tech we've got here, I've moved a pension that was off on a different provider into True Potential. Dead easy, couple of clicks, and within a few days, done like that. And literally couldn't have been actually. Easier than switching energy supplier, funny enough. Just really straightforward and simple. So just you kind of reassure Leslie there that a bit of consolidation, putting everything in one place, getting that firepower, and the simplicity of doing it is why Leslie might want to consider moving that pension to.
Well, maybe if I mention the technology, then Chris can talk a bit about the power of. So the technology does. You can log in. You can use your mobile app, or you can use your website, and what it'll let you do is look at your pension or pensions if you've brought them all into one view. You can then look at the performance. You can look at your transaction statement. So if you're paying in monthly, you can see that and how much it is. If you're taking an income as you get a bit older, you can see that coming out as well, or drawdown as we refer to it in the industry. But also, if you want, you can goal set on your app or on your mobile site as well. And goal setting is really important because it gives you some context about what you want to do with your pension pot. My fear, and I've mentioned this on podcasts before, my fear is that people think that you're paying into your workplace scheme, so I'll be okay when I retire. And now, it's unfortunately it's probably not enough. And we do have a fear at True Potential that by the time this generation who are paying into their workplace scheme hits 60, 65, 70, whatever the retirement age is going to be in 40 years' time or what have you, they'll think, great, I've been paying into my pension. They'll get there and realise it's not enough to support the retirement income they want. Now, that's not me being a doom monger or what have you. It's just say, take a bit of responsibility, take a bit of control for your own pension, set a goal. And what you can do is, with the goal, you can say, I want to retire in 40 years' time or 10 years' time. And I want to have this much income, big inflation into it, like Chris is talking about as well, so that helps. But you might say, I want £20,000 a year income from a pension, or 30,000, or whatever it is. And that the last thing to consider is, are you going to spend more in retirement, or are you going to spend less in retirement than what you spend right now? And I suspect it's probably more. Why? Because you can't come in the office and have free coffee.
That's right.
You can't steal the buffet
Free sparkling water.
Free sparkling water with £10 a bottle there. We can't steal the buffet from guests and things like that, like we do here.
Why stand up looking at me and you, Chris?
I know. I don't know where that's come from.
I share the guilt with yourselves. I think Anna's innocent in the food theft of True Potential. Yeah. So I think that's probably the overall tech side of things. Chris, in terms of the...
Yeah, absolutely. So from an investment side, as a client, we have 5 risk profiles. So defensive right the way through to our high risk profiles, aggressive. So basically risk profiles that are suitable for every single client. Obviously from an investment perspective, we'd love you to invest in our True Potential portfolio proposition. So I'm the lead fund manager of that proposition. I think performance has been fantastic. I've talked about some of the performance figures that a client could have experienced if they would have been invested over the lifetime of the portfolios. I think it's actually quite a simplistic message, and that simplistic message is what we call diversification. So it's diversified across different regions, so not just investing in one country. It's diversified across lots of different types of assets, whether that be company shares, bonds, commodities, property, so many different types of assets in there. But I think what's really different about what we do is it's diversified by fund manager as well. So what you've got is different fund managers, different styles, different specialisms, and all of this is blended together in one single product overall. So For us, we think we've got an absolutely fantastic product, and we can prove it.
And so whether you're putting £1 in or £100,000, that's the kind of expertise and the work that's going on there.
Yes.
Without you having to worry about it.
Yeah, you see all these things about people who build their own portfolios at home. I mean, we've got a team of 20 people that work on this, and they work on it 5 days a week. And we've got senior people, we've got more junior analysts. Everyone is very well qualified. Everyone's done exams. Everyone's regulated by the FCA. It's trying to do these things at home.
Either they know something you don't, or far more likely you're doing something that they can't.
Well,
which
exactly.
is
it must be intensive having to run your own portfolio. You're having to get up early, like very early in the morning, just to see what the Asian markets are up to. And then you're having to stay up very late at night to see what the American markets are up to. And no sleep in the middle of the day because Europe are on. So there's a lot to do, but I think you made a great point at the start as well, Chris, which I'd almost forgotten. Just to stay on the workplace side for one of there's a government regulation that says by default auto enrolment has to come in at a certain price. So what we do by default, it's Paul Durrant, so we shouldn't talk out of Paul's funds too much. Paul manages the default fund for our workplace scheme. But what I'd often recommend is, and this is for all of our auto enrolment, is look at that fund and say, do I want to maybe pay a little bit more to get access to the true potential portfolios? But that applies more diversification then. It also allows you to risk up a bit more as well. And depending on your age, I think this is a whole topic in its own right. When you're younger, you should take more risk. Why? Because you've got 40 years for the volatility, and what it'll say is the volatility will win in the end, because things don't just go down, they go up. You look at this week and I was kicking the TV on Monday morning. It was just like, why is it down? And I understood the reasons why, which is obviously what you explained really well, Chris. The fears of inflation, energy prices, what's going on in China. But I was like, these aren't real things. It's just like nonsense. So we lost like 1-2% on the FTSE just as a proxy. And as you say, Wednesday was more or less back up. Yesterday it was back up. It petered out right at the end of the day, which I was really annoyed with. I was like, what's happened here? But we shouldn't get volatility like that in a week, but that seems to be normal at the moment. But cascade that over 40 years and look at the risk. If you can bear the risk, the reward will be vast from there.
Good. You mentioned young, and if you've got a few more, lots more years ahead of you, hopefully, and you've obviously segued nicely into Sophie's question. You should stop reading my script, Dan. You're too good at giving me the cues here.
Cheating.
So Sophie says, I'm 16 years old. Should I continue to save into my junior ISA? And when do I need to pay into a pension? So I'll let you take that one then, Dan.
Sounding like a politician, it depends. And then I'll just lie back.
Thanks for your question, Sophie. I hope that was helpful.
It depends on how much you can afford. Right now, I would always recommend fill up your junior ISA first if you have spare income and maximise.
And the annual limit on the junior ISA is 9,000. They increased it quite significantly, didn't they? It's up towards 9,000, isn't it?
So fill up your 9,000 limit first. There's plenty of time to pay into a pension. There's plenty of time as girls called Sophie. As Sophie goes into work as well, she'll have access to an auto enrolment scheme, which you may want to benefit from. Why an auto enrolment scheme? Because as well as her contributions, your employer are putting in as well as pension relief as well. So I'd recommend Sophie keeps filling out her ISA as much as possible. It's tax-free growth within the ISA. When Sophie cashes it in at 18 as well, it's tax-free gains as well. So any money that Sophie's made since it's been invested, she doesn't need to pay capital gains tax on it. So she'll get a lump sum come 18. She can then roll that into an ISA at that stage if she wants to. Where you can put up to £20,000 a year. Same message, tax-free growth, no capital gains at the end of it as well. Or she may then choose to put that lump into a pension come 18 as well. But it really depends on how much spare income you've got, and if Sophie's working now, 16, or if she's in education, what she's planning on doing on 18 as well.
Yeah.
She may be going to university.
Well, I think it's genuinely impressive that at 16 years old Sophie's thinking about these issues, because I know I wasn't at 16. I don't know about you, but at 16 I was thinking, well, am I going to get into that bar in the big market or not? And obviously I didn't at 16 years old. Clearly I wasn't doing that.
That was illegal.
I was drinking jungle juice. But no, I think, if you're thinking about that now, Sophie, at 16, and you're making those kind of decisions now, then enjoy your retirement in your 30s, because you're obviously well ahead of probably most of your peers. Let's move on to David's question. Not that David, Chris, but I'll come to you for this one. David's asking, just reassure David about the outlook for the UK market. I mean, on the back of a pandemic, we're through. We're coming well through that now. What do we see the outlook being for the UK?
Yeah, sure. So if we look back through 2020, actually the UK underperformed other regions. So what does that mean now for 2021? Well, it means there's a valuation opportunity there. So actually it means the UK is cheaper than many other regions right now, and that's quite a big draw for a lot of our fund managers, especially if you compare it to kind of US tech or something like that, which is very highly priced right now. I think, in the UK, if you look at the kind of composition of the index itself, so if you look at the composition of the FTSE 100, I think there's quite a lot of attractive sectors in there right now. If you look at, say, banking, mining, they're both areas that look interesting right now. So I think for us, from a UK perspective, we do see opportunity there, but the real key where the opportunity is the valuation opportunity relative to other regions. And you are seeing a little bit more money flow into the UK overall. Certainly if we kind of think over the whole of this year, so year to date, you have seen more money flow into UK equities. So that opportunity is there.
Good. Okay, good. Reasons to be optimistic. Anna, got a question here for you from Keith. Yeah. Keith says, can I get monthly income from my pension? ?
Yes, as long as you're 55 or over, of course. But yeah, that can definitely be set up. So first, you can set it up through an advisor if you want to do it that way, and they can submit the request for you. Or you can do it direct. So you'd basically need to activate your Take Benefit button, which you can do via your client site, or you can contact the drawdown team within True Potential Investments, and they can do it for you that way. Yeah. So yeah, that can definitely be set
nice
up.
And straightforward.
Nice and straightforward. Yeah.
And can people? How simple is it to sort of vary how much you want to take? Maybe not from month to month, but if you're thinking over 1 year to the next, you don't always have to take the same amount, do you, at your pension? You can be a bit more flexible now.
No, definitely not. Yeah, you can just put in a request for sort of a year's time, and then change it depending on what your circumstances are, how much you need. You don't really need to take out more. You shouldn't really take out more than what you really need. But yeah, I think if you need help on it, obviously speak to an advisor. Sure. But yeah, the flexibility is there to change it over time.
That's a great point what Anna said. You don't need to take out more than you need as well. Sometimes what we see is people hit age 55 and they'll take the 25% tax-free lump sum out then. And what people don't always realise is you don't need to take that 25% out in a one-er. You can take some out, and you could even take 5% out a year for 5 years, or not. And because if you take the money out, let's just, for my real easy maths, you've got £400,000 in your pension. You take that £100,000 lump sum out then. Unless you're going to do something meaningful with it, it's going to go in the bank and you're going to lose 2.2% on it because
when
of
you
inflation. When you could have been getting 7.5% in the balanced fund. So it is, and it's exactly the same as Anna's saying. When you start to take your income from your pension, it's do you need it? Because you've spent all of your life building up and accumulating this pension, and I always think you should, of course you need to spend it. That's why we've got pensions, is to have a lovely retirement. But don't just get it because you can. Collect money.
I wonder whether there's almost a bit of maybe a human nature thing around just to feel a little bit rich. You think I'll just take a 25% now so I can see it. But actually, what you're really doing is potentially making yourself a bit poorer by putting it into something which is not going to grow at all in real terms, and certainly you're going to grow a lot less fast than.
What you're doing is you're eating away at an asset that you've spent your life building. You're almost killing it. Earlier than it needs to be.
Cool. Let's move on to Colin and Neil's question then, and this is probably one for you, Dan, and Chris as well. So obviously Colin and Neil have both picked up the great news, I have to say, in the last couple of weeks about some significant investment into True Potential. I mean, it's something which you can talk about this, Dan, that we get a lot of interest in the company over many, many years when you're doing this sort of growth in assets and clients and just generally in the business that we do. Of course, you're going to attract interest. So they've picked up on the news and just kind of wondering what it means for the business and for them, I suppose.
Yeah, it's brilliant news for the business. I think to give some context, I've been at True Potential 14 years now as a founder of it. Chris, 10 years?
Bit less, just under 7 years.
Really?
Yeah.
You've been here longer.
So just feels like that.
Feels like it. Anna?
Just over 6.
Just over 6, Peter?
Coming up 6, bit longer in other guises, 10 overall in that respect, but
yes.
six while sitting here next to you.
Yeah, so so plenty of experience, plenty of longevity in the firm. And what the three of you are, what I am, what 83 of us are shareholders, staff shareholders in True Potential. Now we run a business obviously to get paid, to take our wages. But the point of founding a business and the point of growing one is to always keep your options open, is to look at value events as well. And that's what the Cinven deal represents for us. It is a partial sale of some of our shares to an organisation. I'll talk about why we picked them in just a moment. So what that means for all of us is it validates 6, 7, 14 years of hard work, of blood, sweat and tears, where you can pick up a lump sum from it. But most importantly, certainly for Colin and Neil and for everybody else, where we actually have a lot of shares still left in True Potential, and Cinven are a hands-off investor as well. So it's not a case of taking the money and running. It's a case of taking the money and doing something now with that money. I've spoke to colleagues out there. They're going to pay mortgages off. They're going to maybe buy a first home. It's going to be a deposit for them. And everything else in between. We're going to invest the money and make it grow and diversify as well. If you look at me, I should listen to Chris more often, or maybe not Chris, maybe Jeff, and diversify. I'm not diversified at all. All of my money is invested in my pension and in my ISA in True Potential, and then all of my rest of my money is invested in the True Potential organisation, so to speak. So it's a diversification side of things as well. It values True Potential. It's confidential in terms of what we were valued, but it gives us a fantastic valuation out there, which I think gives us great pride. I think it also gives great confidence in the way in which True Potential are going, the way in which we're growing. Did we need to sell a stake to Cinven? Absolutely not. Why? You just need to read our annual reports. You just need to see our growth rate. We delivered a £74 million profit last year, an EBITDA profit. This year, we'll be knocking on the door of 130 to 140 million pound EBITDA side of things. So from a financial perspective, we're a solid organisation, growing, well capitalised, incredibly well ran, as well as you have to be as a regulated entity. Side of things. So this was a pure event for 83 members of staff, including me and the rest of the senior team. Almost 600 financial advisors out there as well, who are shareholders in the firm. So a fab event for all of them. But importantly, what it now does is it sets the scene for what the next wave of True Potential's growth looks like. What we've always said we would do is work with a partner who would add something new to the mix. So what we didn't want to do is just get somebody who comes in and doesn't bring anything new in terms of their thinking. And Cinven, we've run a process for nearly 12 months, and we've looked at every option available to True Potential. What we really liked about Cinven was we had some synergy almost immediately with them. What came from that synergy? They're a UK European firm, so they understand the culture. Their partners and their management team who we met already work in FCA regulated side of things, so they're already what you call a senior manager approved, an SMCR side of things, not to get too technical, which means they understand what it means to run a regulated organisation as well. They are one of the largest private equity houses in the world as well. So in terms of the financial strength and the stability it gives that further backup to true potential. And what that further backup means we can do is we can accelerate some of our growth plans.
Yeah.
We can work with more financial advisors. We can work with more clients. I think probably the more you've got to know us, ladies and gentlemen who are listening at home, the more that you really realise we don't settle for second best. We don't just want to go 1, 2, 3, 4. We think it's much more interesting, much more impressive.
And much more fun.
And more fun, which is absolutely, I mean, you have to have fun in business as well. And that's not to shock our investors listening. We don't laugh around. But I think if it's fun, if you enjoy what you're doing, you have passion for it, which means you give it 100% as well. Which having that type of growth trajectory means you have to have passion. You have to love what you're doing here.
Totally.
So the whole side of things with Cinven there just backs it up. I see that either Colin or Neil, I'm just looking over your shoulder again, Peter. Doesn't mean we're going to be independent. Yeah, same management team. You're not going anywhere.
I was going to say you're still sat here, which is a good sign.
Yeah, we're all still here. I'm still chief executive. That's the intention for many years, as the same with the rest of the management team and our colleagues below. Cinven invested in us because they like us and they like the model. They want to sit back. They will guide us at times. They'll share experience, which I think is a good thing because we're not arrogant enough to not listen to new ideas. Similar to what Chris and the team do when you're talking to the fund managers out there. All ideas, all information is friendly, so to speak. So why not work with people who've done this before and listen to them? But in terms of running the show, in terms of the independence, it's our name on the door still.
So it's very exciting, and I think, as you say there, Dan, I mean, the people who've built the business and got it to be the highly successful business that it is today are still here and will still be doing that, just with extra firepower and extra fuel in the tank. So thank you for the question, Colin, and Neil, thanks for that answer as well, Dan. Let's move on then to Mark's question, and it's one for you, Chris. You touched on this in your market introduction. Just Mark's asking about a bit of the volatility in the Far East at the moment, and is that something we see continuing, or what's lying behind that?
Yeah, sure. So basically, it all links to China, and what you've got is the Chinese premier, so Xi Jinping. Basically, he's looking at inequality in China. So I'll give you an example. You have 600 million people in China that live on less than $5 per day. So that's 40% of the population. Now, if you think of communism, and you think that doesn't probably sit very well with communism, in the sense that arguably you would expect people to be in very similar positions in a communist country. And actually, if you then look at the other extreme, China's got more billionaires than anywhere else in the world. So you've got China pursuing growth at all costs, but you're starting to see that moderate. And what you're starting to see is Xi Jinping actually target a lot of the big Chinese tech billionaires. So like Jack Ma from Alibaba, he disappeared for a few months. And what you're seeing is China really just, I guess, wanting more of the smaller companies to do well, less big company dominance overall, and to reduce that inequality. As well as that, they're looking to moderate that growth at all costs. So you're seeing them deleveraging the financial system. So what is that leading to? It's leading to volatility. The reality is China is such a huge part of the global economy, and if something is happening in China that is positive, then it will drive global stock markets. If something is happening that investors may be a little bit nervous around, that sort of transition period that we're going through, then actually that can pull down on equity markets overall. So I think, do we see this continuing? I do see a continuation of this. The reality is that she is determined to reduce inequality. What I would say though is he has targeted virtually every industry so far. You've gone through the property companies, the tech companies. He did it with Didi, the ride-hailing company as well. There isn't that many more places that he can target right now. But what I would say is, investing in China, there's a lot of idiosyncratic risk around the political side of things, the regulatory side of things. So for me, I do see this continuing, but I also actually see an opportunity as well. Yeah. The reality is, if you look, I was looking at this before, Chinese equities are down 14% year to date. So if China gets its house in order, then actually, there's a really, really big valuation opportunity there, and there's potential for
I
investors.
think I've heard
to
you
make a lot
say
of
as
money.
well before, Chris, on podcasts and on morning markets as well, that volatility, perhaps people get a bit worried about it, but where there's volatility, there's opportunity. And it's your job, and you do a great job of it with the team, of finding the opportunity within volatility.
Yeah, that's the thing, and this is going to sound a bit weird, but if everything just nicely went up all the time, then how would a fund manager make money? You wouldn't need a fund manager because you just buy the whole market. But the reality is that doesn't happen.
Yeah.
And if you look at it regionally, if you look at a sector level, if you look at it at a stock level, there's massive disparity. And that's great for a fund manager because it gives them opportunity to outperform. That's what they're paid to do. That's what they want to do. It finds them opportunity as well. So for me, volatility brings opportunity overall.
Yeah.
Okay.
And for my more simplistic side of things, volatility, when the market's down, you buy more units.
Yeah.
Yeah.
At a cheaper
as
rate.
well, at a cheaper rate.
Yeah.
And it goes up, and that's how it works. So certainly, with an active manager like yourself,
Yeah.
Chris, it's not about we'll just buy at the top. It's when those dips are occurring, and it's working on that as well. And the inequality side of things in China, good luck sorting that out. I think it's. I don't know if any of yourselves have been to China. I've been twice. I've been to Shanghai twice, and yes, the city is separated with the river anyway. But talk about a tale of two cities, almost. You've got the new part of Shanghai where you've got the stock exchange. Staying in the Shangri-La Hotel, which is where the conference was, £500 a night in Shanghai, which is outrageous. What you'd pay in the middle of London, outrageous price. Cross over the river and you're into the slums within seconds. And that is, you see that difference, Chris, as you're saying, with millionaires, billionaires, and then people existing on next to nothing. These are people living in the pits, basically. And and as I say, on that other side of where the hotel was, where we were staying, opposite it is a mall which puts New Bond Street to shame. Every premium brand going is in there. Chanel, Cartier, Hermes, etc., etc. And you do often think, how can this exist like this? How can you have that and then that? So I think it's a harder proposition, and I think also, not getting too political to what have you, the more you're going to lean on these larger organisations, sooner or later, money wins. And so
I'm just hearing we've got a question coming live. Dan, I'm just hearing it now. Someone's asking when were you in China last? When was that?
I was last in January.
Okay, quick, let's move on. We've got a question in from. Don't ask any more, Anna. Please don't go there. Question in from Raymond, who says, "Will my wife have access to my full pension pot? Should I die before her? Are the rules different before and after my 75th birthday?" Who'd like to take that one? Okay, Dan, you take that one.
Make sure, and this is overall good guidance for anybody with a pension, make sure you have an expression of wish form.
Yeah.
Make sure you nominate who your beneficiary is. If you don't have one, or if you're not sure, Anna and the team, that's what they do. They'll help with that. As the name suggests, expression of wish, that's where you want your pension to go.
Yeah.
When you die. I'll not get into husband, wife, this and this. Make sure it's clearly set out. Make sure you do speak to an expert like Anna and the team, or your financial advisor. They will make sure that your money goes where you wish it to.
Yeah.
There's actually a whole argument again and again. This could be a whole other subject when we're talking about don't take everything you need out of your pension. Because what's coming quite common now is you're seeing a lot of people who hit their lifetime allowance with their pension. They're up to £1 million or what have you, which a lot of them won't be able to spend in their lifetime in the pension. So it's now becoming quite common as well for that to be passed down to their children, and there's some great tax benefits from that as well. So as I say, Peter, it's a whole subject in its own right. Yeah. But the starting point for Raymond, for anybody else, is please ensure your expression of wish form is filled in and on file. That way we can look after your family if anything were to happen.
Yeah, good tip. And also, as I said before, another reason to take some good financial advice to make sure all your affairs and everything's in good order. Right, I think we've got time for one more question, and it's from Thomas. Chris, I suspect you can answer this question In one word, would you recommend investing in Bitcoin?
That word is no.
Thank you.
So
Imagine if he'd said yes.
that's brilliant. Yeah. Look, I think it depends what you're investing for. Would I want my pension to be invested in Bitcoin? I absolutely wouldn't.
Yeah.
If someone wants to take a speculative bet on Bitcoin, that's their choice.
Well, you've used the word there, bet. I mean, you could almost say it's a bit like saying, would you invest in the 315 at Newmarket? Probably not.
I mean, you wouldn't class it as an investment.
Yeah.
You wouldn't go. Don't even know if people do this. You wouldn't go into a betting shop and give the betting shop 20 quid, and put it on the 315 in Newmarket and say, "Oh, I've invested my £20 into that." For me, Bitcoin it's 8 times more volatile than gold. It's way more volatile than company shares. From an ESG perspective, I was reading this morning. Basically, it consumes 121 terawatt hours a year of energy. But what does that mean?
It's like Back to the Future. What the hell is a terawatt?
Yeah, I know. It means that if Bitcoin was a country, it would be one of the top 30 energy users in the world.
Yeah.
So basically, you've got something that's really volatile. It doesn't have any cash flow. It doesn't have any intrinsic value. So it's really difficult to value. And from an ESG perspective, it's absolutely terrible.
Yeah, and I suppose sticking my compliance hat on for once, really. It's not regulated
Yeah.
as well. So, you can put it with somebody and that might not be a real, a trader, and then you could lose your money as well. There's no comeback for it. If things aren't regulated, and we do at times lament the regulator, and rightly so, where it's earned. But to give them credit, what they tried to do is protect the UK consumer, try to ensure providers or investment managers like us stick to the rules, we report correctly, we're capitalised, we have protection in place for clients. None of that exists when it comes to cryptocurrency. And, but by all means have a dabble, by the way, in the same way you'll have a dabble with betting and things like that. But for everybody who says I made 10 times return on my Bitcoin, there'll be many people behind the scenes staying stum and not
made
talking
a hell of a
about
loss on it as well.
Yeah.
No, it's not for serious investors. I think you got that right with the one word answer, Chris, which is maybe have a bit of a fun with it in a dabble, but not don't confuse it with sensible investing. Good. Okay. Well, thank you, Thomas, and everyone else for your questions today. Some really good questions there. Do keep them coming in as well, because as you can tell, we like to get them. So you can send them in on the usual ways. You can through the social media, through Facebook, through our Twitter and Instagram, and you can email in as well. So please do keep sending them in. We'll do another Q&A session in a few weeks' time. But thanks very much, Anna, Chris, and Dan. Any plans for the weekend, Anna? Are you on the Jungle Juice this weekend as well? Or
I'm not.
What are you doing?
I think I'm going to have a calm one.
Right.
I'm getting
That's
my
not like
nails
you.
done.
No karaoke this weekend?
No, definitely not. No, I'm getting my nails done tomorrow. Not very exciting. And watching the Newcastle match.
Oh, good.
See if we're going to get
Who
relegated.
are they playing this weekend?
I haven't even looked. I'm trying not to even.
Oh dear.
Yeah, I know.
So it's
we're
not
not.
as bad as that, is it?
Yeah, it's not a good state of affairs.
Oh well. Well, enjoy that, I hope.
Thank you.
Chris, dare I ask?
So for me, after a night of non-alcoholic Peroni and Jungle Juice, my plan is to one of my mates from Liverpool's actually. So I'll be in London. So one of my mates from Liverpool's coming down to London. I haven't seen him since before the pandemic.
Yeah.
So I suspect it may be alcoholic beers.
Oh, right.
And we're going out for a bit of lunch and then basically a little walk around some pubs in London. So
Very nice.
I think that's very positive.
You'd have a Jingle Juice.
I can do.
Well, if you need any cans of Foster's for the train, just speak to Katie. She's got a few left over. Dan, what are you doing this weekend? People want to know what Lord Harrison of Newburn gets up to on a weekend. So
Stroll around my estate, shoot some peasants. And then,
peasants or pheasants?
Both. No, I'm gonna probably have a quiet one. Like I know, I've had a really busy 3, 4, 5 weeks. We've had the Cinven side of things. We've had the Great North Run. We've had all manner of things going on. And then a week on Monday, Chris is the same as well. We're off for 2 weeks on seminar tours as well. So we're going up and down the country over 10 days, 2 weeks, and meeting all of our advisors. What we do at least once a year is we go and meet them all at their home, so to speak. So I think we're seeing nearly 900 advisors over the 2 weeks,
yeah.
Chris. We spent about 3 hours with them, giving them updates on what's going on at TP. And as you can guess, it's planes, trains, automobiles. It's quite taxing. So I think I'm going to have a quieter weekend. I'm going to be on best behaviour.
Good.
Give the poor body a rest, I think. Yeah.
That's all good. Good to know.
How about you, Peter?
I'm off camping this weekend.
Camping?
Yes.
I thought you'd finished with camping.
No.
Ago,
Unfortunately, there's another round I've got to go and do. So this time there's about 40 of us away camping. So
that sounds like a festival, not a camping.
it's not a festival, but well, it might be. I don't know.
Yeah.
I just get told where to go and when to be there. So
speak to Katie and get some Fosters.
Yeah, I already have.
Yeah.
Yes, that wasn't the only thing in the bag down there. There's plenty more where that came from. So we'll report back on how that went. But yes, thank you very much. Thanks everyone for those answers. And as I said before, do keep the questions coming in. And we're off to polish our lovely trophies and put them in our trophy cabinet. So if you ever come to our office, you'll see them there with everything else. Do subscribe to our YouTube channel. And we've got a question actually in from Emma, which says, please could Daniel tell me how I can go about subscribing? Take it away, Daniel.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great